When I began my research project, I set out to solve one thing, and that was global climate change. My solution was renewable energy. Our energy sector relies on sources that are becoming increasingly depleted as we use them, and they're also ecologically corrosive. So as a commerce student, as mentioned before, I came up with a solution that fit my cognitive framework, and that was this: large-scale, commercially developed renewable energy. I wanted large offshore wind farms, expansive fields of solar photovoltaic arrays. These things were beautiful to me because, as I understood it, more renewable energy meant a sustainable future. Interestingly though, I made an assumption, and I had circumvented everything that I learned about what being sustainable was really about. I'm preaching to the choir here. Sustainable development really is a composite and profound concept. It, defined by the Johannesburg Declaration, has 3 pillars: economic, social, and environmental. And each of these are very mutually reinforcing and interdependent. So as I did more research, I realized that I had skipped over a very important question. What is the more sustainable model for the deployment of renewable energy? Is it originally the idea that I came up with, something that's marked by centralized and commercially developed or absentee-owned model? Or is it another model, marked by decentralized energy generation and community ownership? Well, I'm here to tell you today that I was wrong. I'm here to convince you that community-owned renewable energy, decentralized renewable energy, is the more sustainable model for the future, and that Ontario should promote and implement this model by providing financial, structural, and educational support. Let me begin by discussing what I mean by these 2 models. Again, they're using virtually the same technologies, but they are diametrically opposed to each other in terms of 3 criteria. And that's in terms of size, outcome, and process. Look at size first, a little bit more obvious. It's marked by a large scale and centralized approach, meaning that energy generation occurs a greater distance from where it is consumed, requiring energy delivery over longer distances. Whereas the decentralized approach, energy generation is small in scale, eliminating some of the need for energy delivery because it's produced closer to where it is consumed. Process is all about the degree of local involvement of individuals in the community process, in the community project. So in a centralized absentee-owned project, generally local community members are not allowed into the boardroom of a corporation, but as we move towards a decentralized community-owned project, the process becomes more open and participatory. And lastly, outcome. And this is how benefits are distributed. So again, in the absentee-owned model, the benefits are distributed to shareholders, which are generally not within the local community. And then as we move towards the community-owned model, the benefits are distributed more locally and collectively. So as you can see, this model is starting to look like my preferred model, but we need to discuss it in terms of the 3 pillars of sustainable development. So we'll start with economic first, and I'll just touch on some of these. So first one is that decentralized community-owned renewable energy is actually more cost efficient. Centralized generation, being this energy delivery over longer distances, results in something called line loss. And line loss actually results in 20% of total energy produced in Ontario being completely lost. And by the way, you pay for that in your electricity bill. By decentralizing energy, we eliminate a lot of that delivery cost, meaning that we don't have to overcompensate with excess capacity, also reducing capital investment costs. The World Alliance for Decentralized Energy found that if Ontario implemented a decentralized approach to its energy regime, then it could actually reduce delivery costs by 42% and total capital costs by 58%. And a couple of these other topics is that by providing an extra stream of revenue by renewable energy, say the feed-in tariff program, which gives you your fixed price per kilowatt hour produced from, say, your solar panels on your roof, it diversifies an economy, diversifies their source of income, and also local producers are more likely to spend their money locally. As for social sustainability, I want to take you to a trip to Scotland. And this is actually my favorite study. So the study compared 2 islands, Kintyre, which had only seen commercially developed renewable energy, actually just wind farms, and Giga. And on Giga, the community members took it upon themselves to develop 3 windmills. And the study found that on Giga, there was shown to be an increased support for future generation and implementation of wind energy, not only on a national scale, but also locally, than when compared to Kintyre. They also found there was a decreased concern about issues that are associated with renewable energy, especially with wind, such as intermittency issues of generation. It's damaged on the habitat, maybe even bird kills, and also its effect on the visual aspects of Scotland. And why this is my most favorite study is actually the last finding, is that on Giga, they actually gave a name to those three wind turbines: hope, faith, and charity. And this seems to point to a fact that community ownership actually develops an emotional bond between the community members and the renewable energy technology. And this study is not just alone, it's not standing by itself. These social sustainability benefits are actually visible throughout. So we have increased support of renewable energy on the national and local scale, creates a better rate of project acceptance. It's also socially cohesive. It serves as an educational tool not only to community members about renewable energy, but it builds social capital, builds the capacity for future collaborative and cooperative acts in the communities if they so choose to do. And lastly, environmental sustainability. Again, both of these models are using renewable energy, but the way in which decentralized community-owned renewable energy is deployed, it actually protects habitats from excess destruction. So picture a large hydro dam from a small one, or expansive fields of solar panels versus rooftop solar panels. It's using it's less damaging and uses some of the urban space that is not utilized. So as you can see, decentralized community ownership is actually more sustainable in terms of these three pillars. So then, Ontario should promote and implement this model by providing these three sources of support. And we're going to start with structural. And I want to talk about the types of organizations that these community projects can form. So in terms of the process and outcome dimensions, there's a lot of flexibility that's built into community ownership models. And this is important because projects need to be responsive to the context of the local place, especially if they're going to include the diverse community members, which will have a diverse set of strategic and normative reasons for developing community-owned renewable energy. But if we are to move from the origin out towards a truer definition of what decentralized and community ownership really means, we need organizations that are in harmony with the motivations of decentralized community ownership. And those organizations are called social enterprises. Social enterprises have two things that are important in terms of the process and outcome dimensions. First is that they have a public benefit mission at their core, which they pursue in their normal business operations. And secondly, they also involve the community members in it at a greater scale. So therefore, again, it is in harmony with the decentralized community ownership model. A lot of social enterprises are actually not-for-profits. And this brings me to my first recommendation for structural, is in terms of enhancing nonprofit organizations' effectiveness. One of the issues that surrounds not-for-profits has to do with their surplus generating activities. The Canada Revenue Agency actually defines non-related and related businesses for these organizations and results in not-for-profits actually having to set up for-profit organizations to help fund furthering their public benefit missions. And this is onerous and costly. It's an unnecessary workaround. So one way that this could get overcome is through something that was implemented in the UK called a destination test. So as long as a related or unrelated business profits go towards promoting a nonprofit's public benefit mission, then it is tax deductible. It's actually tax-free, and which is the benefit of becoming a not-for-profit. Another way to enhance nonprofits' existence in our market is through perhaps a new legal format, Community Enterprise Corporation, which has a legally binding public benefit mission combined with community ownership of assets and restrictions on how dividends are spelled out. I'll skip over not-for-profit corporations. If you have a question about that later on, just in the interest of time. I'll talk about governance structures. Governance is all about how decisions are made. So this is the concern is about how projects and policy is developed and through these decision-making governance structures. So the first one is subsidiarity, which is actually a popular organization tool that's principle that's in the European Union. And it's all about bringing down and devolving the power of decision-making to the lowest appropriate level, thereby instilling local action first and letting people to be more active and more creative. And the second one is multi-level governance. And it recognizes that policies and projects affect a diverse set of people from different backgrounds, their different organizations, etc. And they will have some sort of input on how these policies should be developed. So thereby, multi-level governance helps to avoid policy gaps and also policy feudalism from protection from concentrated interests. So an example of how these governance structures can be implemented is something that was in the recent feed-in tariff review called a point system. More points, the more you're winning. And it's basically a way to prioritize community ownership projects as well as projects that have support from municipalities. So again, your points are awarded for if you meet the minimum equity participation rate of say 50% from local individuals, then you get more points for your community, etc. And the last one I'm going to touch on is the transformation of the infrastructure and the culture that goes along with it. So generally stating, the North American grid is it needs investment. It's a little bit antiquated, and decentralized decentralized generation, requires different sets of infrastructure. So in the future, the structure needs to support this movement. And the second one is that there's a little bit of a sticky culture that goes along with centralized generation. And this is really illustrated by Hydro One's 7% rule. What Hydro One says is that out of the total percentage of generation and capacity of electricity, only 7% can come from renewables. Their concerns are about intermittency and also islanding. The thing is that there's a lot of contrary evidence to this. Case in point would be Denmark, which already has 20% of its total energy being produced by renewable energy, and they're ramping that up to 35% by 2020. What's important to point out for this is that, again, culture or ideologies are a little bit sticky, and there are more systemic factors involved. That maybe that be engineers and the energy delivery company, Hydro One, is used to making profits in a centralized regime, and they don't want to switch. And they're possibly also that they are a privately held energy delivery company, might have something to do with it as well. Next is financial. In financial, there are two themes that need to be considered when implementing these. First is that community energy projects need a low risk or promised financial return on investment. And the second is that they need access to finance in the critical early stages of development so that they can establish their enterprises as well as have working capital to work with in the beginning to get themselves running. So we'll look at the first one. In terms of low risk investment, this is where the feed-in tariff is absolutely foundational. It provides that stream of revenue, that promised return, that fixed 20-year term of getting your kilowatt of energy being paid for. The other thing is to consider is that if the market didn't know or wasn't sure that the feed-in tariff would exist the next day, that would be a huge issue for community energy projects and the renewable energy industry in general. And another thing that's established in the recent, or it has been established in the feed-in tariff system, is something called a community price adder. So if you meet that minimum equity participation rate of 50%, you get an extra 1 cent per kilowatt hour produced, which, if we're talking about megawatts of power, starts to add up. And the second one has to do with the critical early stages of development. There is unmet demand for growth and startup capital for these social enterprises, which I'm emphasizing as being the most important implementation or type of organization. Generally, commercial banks have been the ones to provide loans, but they don't generally place a lot of value on community benefits, and they perceive community ownership as being more risky. So they're not keen on it. And currently the way that these projects are being funded is through grants. The Community Energy Partnership Program provides $200,000 up to for energy projects. But in order for us to scale up this model, we need more money. So we need to mobilize private capital. And Canada needs to build its social investment market. So when we look locally, social investments can come from credit unions or community economic development investment funds. But again, these are still not enough. We need private capital to provide the more investment. And so what's interesting is actually there's a new trend called impact investing. And this is that in private capital. So corporations are actually looking to make sure that their investment dollars go towards advancing something that that is concurrent with their, or in harmony with their philanthropic missions. And they're also looking for equal or above average returns as well. Don't worry, they're looking out for the short term as well. But one way to get capitalize on top of this, excuse the pun, is an impact investment fund. So something like this would be something set up by the federal government. It would be first loss capital estimated to take about 5 years to grow, but it would attract investors, start to dilute some of the investment risk, but also set up a flag and say that social investment, social finance is the next step for Ontario and for Canada. Ontario is doing something this more regionally. They've set up a $20 million social venture capital fund. But again, why the impact investment funds are so important is that even if just 1% of total managed capital assets in Canada were diverted to social enterprise, that would be a $30 billion opportunity. And the last topic here on finance is utilization of cooperative financing. This is about engaging individuals as investors. So one way as a for-profit, cooperatives are organizations that are owned and run by and for their members. So the for-profit cooperative would use an equity financing, and not-for-profit would use community bonds. There's an issue with regards to Ontario Securities Act. If you have questions about that, I'd love to answer it in the end, just interested. And lastly, educational recommendations. These are some of the main themes for my recommendations that education needs to provide: some of this industry collaboration, synergy, and increased participation in the green economy. So the first one is what I like to call unifying organizations. These organizations assist community energy groups by providing services and information so that they can better develop their projects, as well as providing a reflexive and learning process so that future community energy projects don't have to reinvent the wheel. They also educate the public about community power, or community-owned renewable energy, and provide a broader vision for our energy sector. Some examples of this include the Ontario Sustainable Energy Association and the newly established Renewable Energy Facilitation Office. And lastly, these two are about making sure the skills are there. If community-owned renewable energy desires to source its labor locally, we need to make sure that that labor exists locally. And currently, Ontario is facing some workforce gaps. Specifically, if we look at electricity sector, between 2007 and 2012, 28% of the electricity workforce was slated to retire. And this is a problem. So we need programs that increase the visibility of trades-based occupations. One such program we looked at St. Lawrence, the Sustainable Energy Applied Research Center, which utilizes their resources, their students, their faculty, and staff, to work with small and medium enterprises that are in the renewable energy industry with regards to their project development or product development. And lastly, one has to do with social enterprise skills. Business students are not taught generally about social enterprise and their importance in our economy. And so business schools need to provide explicitly this education, but also better provide more opportunities such as internships to get individuals more involved in this sector. So in conclusion, decentralized community-owned renewable energy is the more sustainable model when compared to centralized absentee-owned renewables in terms of the economic, social, environmental pillars of sustainable development. And therefore, Ontario and Canada should promote and implement the decentralized community-owned renewable energy by providing a myriad of financial, structural, and educational supports. Decentralized, pause for effect. Decentralized community-owned renewable energy has the potential to flourish on a grander scale if and when fractures in our current energy regime occur and are exploited. But for that to happen, authorities need to understand and see the difference between decentralized community ownership and centralized absentee ownership, the benefits of it, as well as have a more complete understanding about what being sustainable is really about. Because the most effective strategies moving forward are ones that consider our economy, our society, and the environment as an integrative whole. Then I want to quote Naomi Klein, who's an esteemed journalist. She said, that real solutions to the global climate crisis are actually our best hope of providing and making our economy a more enlightened one, and may I add also our society a more enlightened one. And I believe that decentralized community ownership of renewable energy is one of those real solutions.